I'll tell you the real reason why many of these sleepier sectors, industries, and stocks are having trouble performing. I'll tell you the exact reason. Okay, this is so simple. Think about this. Right now, you can get 4 to 5% guaranteed on your money. So a lot of people look at that and they say, why would I risk putting my money in some of these slower growth, more value-related stocks that you're usually not expecting to get you outsized gains anyways, when I could put my money in a savings account, a CD, a treasury, and get myself 4 or 5+%? Like, why would I do it? And that's the way a lot of market participants look at it right now. And so that's why you see a lot of money, obviously, in savings accounts, CDs, 3-month treasuries, 6-month treasuries, 1-year treasuries, things like that. So people are just like, why is it worth it to buy something? Now, when growth stocks are performing well, because people look at those differently. They say these stocks have outsized gain opportunities. These stocks have insane upside long term. So it makes sense to buy those ones, even if interest rates are 4 to 5%. Now, if interest rates were 10%, if we were at Fed funds rate 10%, I could tell you even growth stocks wouldn't perform in that sort of market, because even then people would say, well, no, it's not even worth it for me to hold growth stocks. 4 to 5%, people say values and divs, I don't want any piece of you right now. 10% or above, that's when people say growth stocks, any stocks, I don't want a piece of any of y'all. Because at that point in time, why not just keep your money in a savings account, right? Why not just keep your money in CD and get all that guaranteed money? So yeah, very different depending upon where the Fed's keeping rates. If you're in a very low Fed funds rate territory, let's say you're at 1% or especially under 1%, then all stocks are gain, because people say I got to buy my values and divs. People say I got to buy growth stocks because we're in such a low interest rate environment, right? So for the past month, the Qs has gone absolutely nowhere. I mean, absolutely nowhere. It's made a 0.13% move in the past flip and flapjack and month, right? Absolutely nothing. And people are like, man, the market was so entertaining there for a while, right? I mean, it was really entertaining, honestly, for 18 months. Let's call it what it is. 18 months. 2022, the market got wrecked, stocks got wrecked. That was entertaining. Like, it was, if you're taking advantage of deals like myself and maybe some of you guys were, like, that was a great time to be in the market, right? But it was a highly entertaining market. Like, every day it seemed like, this stock crashed and the whole market crashed and, oh my gosh, the end of the world, and the Fed's raising rates more, right? And then the first half of 2023, obviously was super entertaining. That was almost the inverse of 2022, right? But we were just up in a straight line. So really we had like 18 months of just a super entertaining market and just like a lot of fun. And now all of a sudden it's turning into this like boring mode, right? You look at the S&P 500, it's hardly moved in the past month. Hardly moved, right? I mean, look at a stock like Meta. Meta's up a whole 1% in the past month. Look at a stock like AMD. It's a 2% mover in the past month. Look at a stock like NVIDIA. NVIDIA has been one of the most volatile stocks in the entire stock market for the past, 18 to 24 months. And NVIDIA's, a 3% mover in the past month. Oobity Booba stock. Look at Oobity Booba stock, right? 1% mover in the past month, right? So it's just very, very like mundane, boring market for this past month, okay? Reason number 1 of 4 why this is transpiring is the previous 2 months. The previous 2 months before we got to this past month were absolutely beautiful. They were up in a straight line. They were highly entertaining, right? Look at the Qs on a 3-month, and you can see this played out by a 3-month chart, right? The Qs on the past 3 months is up over 12%. So, we looked at the Qs obviously in the past month, and it's like, wow, the Qs have done nothing, right? Not really up, not really down. But yeah, it had already gone on a beast run going up prior to obviously the past month, right? Look at the S&P 500 in the past 3 months, 8%. Usually the general saying is the S&P 500 is going to get you about an 8%-ish type return a year, right? And the S&P 500 went up 8% plus in a matter of 2 months. So we came off of a very, very hot S&P 500, right? Meta stock is up almost 28% in the past 3 months, right? It's a very, very extraordinary move for Meta. So yeah, it's gone sleepy recently, but it's been hot, right? AMD's a double-digit gainer in the past 3 months. And NVIDIA, almost a 43 flip and flapjack and percent move in the past 3 months, right? So the fact is, sometimes in the market, after you go through a very hot time, you need to take a breather. Oh, you got to take a little breather, okay? And that's exactly what we have seen transpire. We had an incredible, obviously, 3-month span, but the past month has just been a sleepiness out of those 3 months, okay? It's very natural for markets to do that over time. You're not going to be up in a straight line every single day. It's not always going to be the most exciting time in the market, okay? Reason number 2 why this market has become very boring here recently and really lost a lot of momentum is AI. Blah, okay? AI has been a big disappointment so far. Obviously, the first half of the year, from basically almost the start of the year all the way through, to July, there was so much excitement about artificial intelligence and, how all these stocks are going to benefit. And we've been nothing but let down so far, okay? AMD is a perfect example. Everybody got so excited. AMD is going to do this. AMD is going to do that, right? And AMD should be a successful player in the AI market in a substantial way in future years, right? But right now, AMD's just not seeing the benefit, right? AMD's revenues were actually down 18% for this most recent quarter they just reported. That's obviously, bad, right? And so obviously the stock just fell, and that just zapped a lot of momentum out of this market when those AMD results came out, right? Even a stock like Adobe's gotten thrown into this is, super exciting AI capabilities and a lot of their different products and services. All this is going to be huge for them. And we just haven't seen it in the numbers in regards to Adobe, and look at that stock price move down, right? Tesla obviously gets grouped into AI, for obviously their self-driving software and those sorts of things, right? But, here's the thing when it comes to Tesla and AI, okay? And I think this needs to be said, okay? Tesla is a massive long-term beneficiary of artificial intelligence, right? In terms of their self-driving software, it's not even finished as of today, right? So if you're thinking out 5 years from now, sure, Tesla, robotaxi networks, opportunity and all that stuff, right? Beautiful. And, hopefully, $99 a month, maybe $199 a month for their self-driving software. Once it's complete, and it's not like a beta version anymore, right? And it's a real deal Holyfield finished, 100% finished, right? Yeah, at that moment, Tesla can be actually generating significant revenues and profitabilities from AI. But right now, it's not really its time to shine yet, right? Obviously, they've been working on AI for years, and they continue to do that, but it's not like it's really necessarily helping in the numbers in some epic way as of right now. It should in future years, okay? And so that stock just got zapped. People just want the money now, right? Even a stock like Microsoft, which has definitely got grouped into AI stocks and all their AI capabilities and their investment in ChatGPT and those sorts of things. And we just saw in their numbers, like Microsoft's numbers were good. Their earnings were good. But it wasn't like there were some insane numbers from artificial intelligence, right? Just everybody got way too excited that this is going to be a game changer, even in regards to Palantir. And I know a lot of people say, oh, Palantir doesn't matter to the market that much. It's not a big enough market cap. It matters so much more than people think. Palantir is a very famous stock, especially in the retail community, but even outside the retail community, a lot of big Wall Street analysts have picked up the stock now at this point in time. And so a lot more eyeballs are on Palantir than there were, I can tell you, a year ago, 2 years ago, 3 years ago, okay? And when it comes to Palantir, obviously their earnings were just like, a letdown, right? They came in line with EPS, they came in line with revenue. Like they barely met their expectations. And so when you barely meet your expectations, that's going to zap all the excitement out of the room. And then they barely upped their revenue guidance for next quarter. So it's clear as day that Palantir is not seeing a short-term bump from anything AI related. Now, could this benefit Palantir over the next 5 years? Sure. And we might see that in Palantir's numbers in a substantial way over the next 5 years, right? But as of today, the fact is we're not seeing AI bump up Palantir's revenues in a substantial way. And that's a massive, monumental letdown for investors out there, seeing that when, the expectation was, oh, this is going to be a game changer for us and we're going to start seeing crazy numbers, right?